Hey, it's Mack with PriceActionTradingSystem.com, and it is Monday. It's September the 14th. This will be our chart lesson for today. And as you can see, the volume is down considerably compared to what we were seeing. Um, this is much more normal type volatility and uh, volume based on what we have seen recently. So maybe the market's getting back to normal. Some of the craziness is over. It may just be a temporary lull. You never know. But today felt much more, I always hate to say that, much more normal because but that's really the best description I can come up with. Um, More standard type price action is what we're seeing lately. I like the volatility to some degree, and then there's some things I don't like about it. So, you got to be careful with it. But anyway, not nearly as many trades today. We had a clear two-tiered channel working down. We got a close outside here, a move to a new low. Then we reversed, and we just pretty much not much else happened the rest of the day. We stayed in this little probably 1937 to 1945 kind of range, maybe 46 you could call it. Um, so really around less than 10-point range. So just not a lot going on. If you used your shorter term trends within that, it was really straightforward. You see the short term with the break, a new high, then you got one working down, a break, a new low. We kind of chopped around, and one started back, break, new high, then one working down, break, new low, and that pretty much did it. That got you into the 2 o'clock hour, and nothing much happening for the rest of the day. So, but let's back out a little bit. Talk about the trades. Won't take long today. Just there weren't many. Um, Early on, this looked really rangy around the 7 o'clock hour, and you can see this was like the double test of this low right down here. We had a little double bottom. We moved down and a little bit away from the EMA. This is a first entry. Um, Actually, you could count this as a second entry, counting off the high, because this swing is higher than that one. So if you pull down first entry, pull down second entry, so it is a second entry long, but that's not really why I like it. It's really a bounce off the strong support and what looks like a range. You can't ignore the trend line uh, as well, but there is enough room to get out before you come back. Once it touches this again, I'm not too crazy about it after that until you get the break. But at this point, this looked more like a range, and this support is really strong right here. So I kind of like this entry. It's a little bit aggressive. Um, because it's the first entry counting off the low, but I like it just for a quick scalp, and it was a quick, easy scalp. But notice what happens. You have a new low here. You pull back first entry, pull back second entry. Look how bearish that bar is right off the trend line. That's a nice setup, and look at it go. And it just takes off. And what I would have looked for here was a possible measured move. It's your first move down, and then when we started lower again, that would be your next one. And we didn't quite get there. We got close, but I would have used that for my likely first target until you got this support across here and you got in this range. Then you can't. Then you got to kind of play the range after that. So, but that gets you real close. So nice setup. I don't like this one. This is basically a breakout pullback short, but it's a first entry. That's a fairly bearish bar right there. But you got to go low at the very low of the day, and it's just not worth it. So you just kind of got to sit there, and then notice this. We get a new low. You get a pullback first entry, pullback, and you get a second entry. It's too early for the second entry. It's not a good setup either. Look at all those dojis stacked up there. That's where they trap people. So when it turned down and gave you a failed second entry short way down here, I like this for a possible aggressive trade. Um, you can't make it blue because you haven't had a break of this trend line yet. And so you really shouldn't be taking any shorts. Only one you might consider is this one because it's a trap. And there's enough room to possibly get out, especially if you used a limit order before you got back to the EMA and the trend line. It did push on through, but that's why I like this one. This one is actually supposed to be blue right here. I like this one for a blue uh, because again you get this second entry long, and it is a fairly bullish bar. And you could treat this like a failed second entry short here, but you're looking for a retest of this high anyway. Notice this little channel working up. Um, you don't want to go short right there. It's not a good enough setup. So when it fails and turns up, I like it for a long. Again, quick, easy scalp. And we're still looking for a retest of this low, but you got to wait till this one plays out first. And so now you got to break a new high, and you get that little trap right there. It's tempting to go short right there, but look at all that overlap again. 4 bars in a row. If you did go short there, it still works, but you got to ride this little pullback out. So just wait on that second entry off the um, counting off the high, and there's your first leg down, first entry pullback, and then there's your second entry. And look, notice you got a nice bearish bar. It broke out the top and then turned and went out the bottom. Just go short there, or you can wait on this bar to close and go short below it. Either way, that's your signal bar, and turns out to be a great move. Somebody sent me, they actually went short right here, um, but their chart looked different. They had a bullish bar right here for a signal bar. Then they had a little inside bar that kind of closed down, but it didn't break below that bullish bar, and they went short right there. I think this is where it was. I don't still have that chart. Actually, they got short way down here, and they got short right into this support right here. So yeah, this is where it was. But they got short way down here, and you can't get short way down here. The entry is up here where your signal bar is, and on their chart, this was a bullish bar, and and they waited till this bar, which was closed way down here, and they went short right into that support area right there. And you got to be careful with that. Just wait, and then you get this set up, and look at it go. So you can't be too eager, and you gotta let the reversal play out, plain and simple. Um, okay, I had an interruption there, but we just finished talking about that trade. And this turns out to be a great trade, and it runs down to a new low, and then it pulls back, and this one was actually supposed to be green. Forgot to go back and change these colors. But this is, for all intents and purposes, a um, one more push down. It's basically right off the trend line. That's why I like it. It really confirms the trend line. It gives you your break, and it is kind of a neutral bar, so that's the reason it's green. You can look at this, even though we've made a little bit lower low here, you can look at this like 2 legs back as well. And I pretty much treated this as a failed second entry long almost. You really had your failed second entry long here, but I wouldn't go short off that low side of that trend line. But when it pulled back and it gives you your third touch and it confirms it, aggressive traders are going to take that. And what you might have considered doing was when it broke below this bar, drop you a limit order, but you wouldn't have got filled. You notice it just came back enough to touch it there. And I doubt you would have got filled on that. So if you didn't use a stop, you probably missed this trade. But I liked it because a lot of times you'll get a second leg down, and it could have taken off and really gone, made another leg down, and we didn't quite have that measured move yet either at the time. So, but it is aggressive. You can't mark this one red. It's a little bit more aggressive trade, and for the reasons I just talked about. So, but then and I didn't really consider this to necessarily be a break here. It could have been a little flatter, and it still fits really well. You can see that. You do get a little overshoot right there, but it still fits pretty good down through there. You notice we're right off those lows and right off those lows, and you get a little overshoot, which usually leads to a break. So that'd be another reason you got to be a little bit concerned about that one right there. So that makes it more aggressive too. But then notice what happens. It pull back. First entry, pull back. Second entry, you get this big bearish bar. That's the first likely break of that. You might have questioned if there was a break earlier, but that one tick wasn't enough to necessarily say, hey, we got a definite break. So I like that one for a short there. and figuring that we'll try to make a new low here, and we do try to make a new low. And then you get this trap. I like this one. Notice how you bounce there. That's your double test of this area. Um, it's a little bit higher low. The closes are higher. Um, and you get that big bullish reversal bar. So a real aggressive trader may go long right there, but I personally think you're better off to wait and see what happens. And notice what it does. It turns down again and it breaks, um, tries to go lower and then turns and goes up. So I like that. And it's a little lower high, so you can treat that like a second entry. So I like that one. Plus it's right off that trend line. If you draw it off those first few bars, you figure we're probably going to go higher now because your reversal pattern is played out. So I like that one better than the green one. And then of course we run to the upper side and we overshoot it. Then we get a break, move to a new high. We turn down. We weren't quite here. This is kind of a repeat pattern over here. It's a little smaller, but it's a repeat pattern. So wait on that second entry right there. It's just enough for a perfect scalp out, and then it bounces. And you really can't ever get any lower than that. And that gets you into the 2 o'clock hour. So, but yeah, I treated this like a repeat pattern of this one. And it does look very similar and plays out very similar. So just not a lot of trades today. A relatively quiet day in a trading range. And again, there's probably some other trades in there if you wanted to be more aggressive. But I didn't see any that was even worth circling and talking about. I think if you took any more, you're being a little bit too aggressive. So, but that was about it. Just not much to talk about. Very low volume today. Real, barely any volatility once the market opened. The market opened right in here somewhere. Actually, I think it opened back here. And you had that nice move down, and then it was quiet the rest of the day. And then you can see the EMA, and we're swinging back and forth on each side. That's a sure clue that it's a trading range kind of deal, and you usually can trade both sides of it like that as long as all your other. I mean, you got to play the trend coming down, but once it's over, you can play the trend going up. And some people get confused about that. The range here is the overriding factor. But you got short-term trends within that, and you can follow the trend rules within. But once you get to the top of the range, you got to switch over to range rules, or once you hit the bottom, you got to use range rules. So that gets confusing for some people. But you got to remember that within this channel, there's ranges, and within ranges, there are shorter-term channels, and then within this channel down, there's a shorter-term channel. So that's why price action works at every level. And it never changes. So just remember that and make sure that you don't get confused by that, because a lot of people do. They think, okay, we're in a channel here. I can't trade any trends. I can't, I can only buy the lows or sell the highs. Well, that's not true. You can trade the little trend going up, and then it'll be a channel coming down, and they think, well, I can't buy in here because it's all downhill. But yet this is a trading range within, and you can use range rules. Now, if this was a real strong downtrend, then I would say no, don't, and it's just a real tight, tiny channel like something like this right here. This is just congestion, which is a real small range. You probably don't want to trade that counter trend trade. You'd only want to trade that one with the trend because there's not much room in there. So make sure you understand. I think I said channel a minute ago when I meant range. So I do that sometimes for whatever reason. But all right, I'm going to wrap it up. Not much else we can say about today. No sense in beating around the bush and carrying this on any longer. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.